From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 23rd, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will look for entry and exit opportunities. Looking over the news calendar, we have a relatively light news week, but there are some events that you'll want to make note of on your financial calendars as we go throughout the week. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's go ahead and get started here on the USD, CHF, dollar, franc. Over the past several weeks, let's go back over a couple of months, back to October, November, we saw the dollar in a pretty good strong move. It moved all the way from down here at the bottom into the 9,500s, all the way to the top of the chart into the 1.0300s. Found some resistance up here beginning of the year and has been falling. The USD CHF has been falling pretty much a dollar sell-off since the beginning of the year. That's along the black trend line that you see here up at the top of the chart. We're reaching into some significant areas of historical support and also the 100 period simple moving average as we dip into the lows into the 9900s this week. If you follow the pink shaded area back in time, and really the blue shaded area underneath it as well. Pink and blue shaded areas right here where the current market price is and the 100 period simple moving average. You can see back here resistance, these red boxes around the blue zones show you where the market found resistance in here. And then even back here where this blue box is, some resistance back where the blue box is on the left-hand side of the chart. So we know that this is historical areas of resistance. So we know that that can offer us a clue to current support into the parity level or even into the mid to upper 9900s. Again, like I said, the 100 period simple moving average also sits right here into 9970 or so at the current moment. And that's where we are currently finding support. Let's take one simple Fibonacci retracement level from the lowest low on the chart all the way down here at the bottom to the current resistance high, or let me say the lowest low of the current trend line, the blue trend line that we've been working with. Some interesting things here. 50% retracement level also sits right here at the 9950 level, right around that blue shaded area just underneath the 100 period moving average. So some significant areas of support. If we're going to go short, if we're going to sell, I think we need to get away from these areas of support. In fact, I think we want the market to go up before it goes down again. Give us a better investment for our price. Remember, buy low, sell high. If you're going to sell something, you want it to go up before you sell it. So selling into resistance or breakdowns of support would be in connection with this current downtrend, with in agreement with this current downtrend that we're seeing here along the black trend line. Of course, we also want to watch for clues to support and reversal. Let's take it down to the 4-hour time frame. Forex Black Book trend bar still red. That also gives us some downside. You know, a couple of things to think about the pattern of the trend. We see the rise here. Let me change this trend line to a shorter trend line. Give me just a second. So we see the rise here along this black trend line, and then it fell. We see the rise and then the fall, and we see the rise and the fall. The question is, will that pattern of the trend continue? We've seen 3 rallies and a fall within the current downtrend. Will we see that continue? Will we see another rally and then a fall, or will it just rally and reverse? We'll have to wait and see. The pink zone, of course, is a clear area to watch. It's right around that parity level. If we're going to see anything today, I think we watch for the rally. I don't think we look for the continuation. Now, if it just continues to go down, let's not be surprised about that. But remember, buy low, sell high. If you're going to sell, I think I would prefer to sell it probably, at least at this point, closer towards the 1.0050 level and the yellow shaded area for the dollar franc. Moving on over to the euro dollar, just the exact opposite. Everything is the exact opposite. Over the past couple of months, the blue trend line was down. Over the past month, going into early January, late December, early January, we've been on the rise along the black trend line. So we know that, of course, the current momentum is bearish for the US dollar, or this currency pair goes up. We see it breaking or challenging, let's say, the 1.0700 level again today. We've already done that over the past week or so. We've challenged it before. The question is, will this be the real breakout, or will this just be another false breakout above 0.700 and we look for it to turn back into the blue zone? Again, buy low, sell high. If you're going to buy something, buy anything in the direction of the current trend, you want to buy at a lower point. So buying at the high point just doesn't make a lot of sense. We're not at the 100 period moving average here on the euro dollar. One simple fib from the high of the blue trend line down to the current low down at the bottom of the chart, we find the 382 sitting at 107.06 is what the number is, but that's right at the top of our blue shaded area. Take it down to the 4-hour time frame. Look at this. Here's a different vantage point, isn't it? We do see on the 4-hour time frame, the market has indeed broken above the blue shaded area, the 0,700 level, and now dipping into it as support. So again, similar to what we talked about on the dollar franc, we have seen that pattern of the trend where we see a fall into the trend line, a fall towards the trend line, a fall towards the trend line, and then support and reversal to go back up within the overall trend. So here we are again trying to dip down. So if we're looking for an opportunity here today for the euro dollar, we might be looking for a fall here. A hold at 1.0700 may give us an opportunity to go long here for the euro dollar. The risk in that scenario would be the breakdown of the blue zone and the continuation or reversal back lower here for the euro dollar. So definitely watching this blue zone 0,700 to hold as support for us today on the euro dollar. Let's take it on down to the GBPUSD. Of course, two different really significant movements here. Of course, the black trend line here showing us the longer term trend. It's been a downtrend, but we've seen significant volatility on this currency pair over the past several days, really. You zoom it in, last week we saw the gap lower, the rally higher, the fall back down, the rally higher. So this currency pair quite volatile over the past week, really, since last weekend. You can see it challenging higher today, 1.2420, 2400, top of the yellow shaded area. We're attempting to stay above that today. We're at 1.2435 or so right now. If it can stay above the 2420 or so level, the yellow shaded area, we might look for a continuation higher. Right now we're challenging it. We need to see if it's a real breakout, and then we look for it back up here towards 2480, 2500. Look back here where the blue box is. See the blue box on the left between the green and the yellow shaded area? If it stays above the yellow zone, where does it go? The green zone. That's what the blue box tells us back here on the left. So we need to satisfactorily break above the yellow shaded area. 4-hour time frame, similar to the euro, we are a little bit above that yellow shaded area here on the 4-hour time frame for the GBPUSD. We're sitting just above the 1.2420 level. Again, resistance here, offering us a clue to support. So if you're looking for an opportunity today in the direction of our current momentum, I think you're possibly looking for a buy scenario into 2400, 2420. The risk is, of course, a breakdown of that yellow zone, 2385. Looks for a reversal once again here for this pair. So clear area to watch for potential support and continuation higher here for the GBPUSD. Moving on over to the USDCAD. This is a tough currency pair right now because, interesting enough, the US dollar, this currency pair shows US dollar strength against the Canadian dollar because we saw that significant rally higher for this currency pair where we didn't see it exactly on other currency pairs. We saw a little bit of US dollar strength last week when Fed Chair Yellen spoke, but on other currency pairs. But this one's such a dramatic turnaround here for this currency pair. We're challenging into the double blue trend lines. Remember those? We studied those back here on the left where it was rising trend for several months, and we're just stuck inside there right now. Let's go ahead and zoom it back in. There's the double blue trend lines. Here's the 100 period moving average, and we're waffling on either side of that right now. Black box is going to be interesting as we go down to the 4-hour time frame between the orange and the yellow shaded area. Take a look at this. We currently are finding support at the the yellow shaded area. We're currently finding resistance at the orange shaded area. So at one point in time, we're going to look for either a break of the orange zone and a continuation of the upside here for the dollar CAD, or we're going to see the breakdown of the yellow zone and we're going to see a reversal once again for the US dollar. Sell-off of the US dollar sends this back lower. So we'll continue to watch for that. Right now we're just kind of bouncing around between the yellow and the orange shaded area. If you're going to go short, if you're looking to sell this currency pair, get as close as possible to this orange shaded area. We're looking at 1.3330 as an opportunity into the orange zone to go short in the direction of what was the longer term bearish trend. So that's something to consider. However, momentum over the past week or so has been seriously bullish. So if you're looking to go long, then you've probably already missed the boat here at the yellow shaded area. So it depends on how you're looking at the US dollar. I know that a lot of people are thinking a little bit short for the dollar right now. So that would likely look at the orange zone as your opportunity today for the dollar CAD. Moving to the dollar yen, of course, this one has been dollar short over the past several days, but we have found support here for this currency pair. Again, long-term trend was black. We see a shift in the trend, the blue trend line over the past several days. Zoom it in several times. We saw a rally last week and then a fall back down. So let's talk about, first off, what if we're looking to buy? If we're looking for the US dollar to come back? Well, if we're doing that, we're likely looking at our supports at the orange shaded area. We're down here closer to the 113 level. Support, where the market found support here, is where we would look for our lowest risk and highest reward opportunity to look for support and reversal to go back up again. So that's close as possible to 113. If you're looking for a continuation of the dollar sell-off, then now that we've seen the market pushing underneath the yellow zone will become your potential opportunity. 113.85, 114.15 is that opportunity. We have seen a little bit of a touch lower here for the day today on the dollar yen. Take it down to the 4-hour time frame. Take a look at this. We saw the market push down, open a little bit lower than it closed on Friday. We're now underneath the yellow zone. So that yellow zone, highly important for the day. Look at the supports we see back here on the left-hand side. Those will offer some resistance here into the 114 level for the dollar yen. If you're looking to go short, at least get it close as possible to 114, 114.10. That will at least give you your lowest risk. Your risk there is that it breaks back above the yellow shaded area and goes back up again. Again, on the upside, if you're looking to buy it, again, the orange shaded area risk is that it breaks under the orange zone and goes lower. So at least at this point, sellers are looking at the yellow zone, maybe even the green zone, but right now I think the yellow zone is your most important area. Buyers are looking at the orange zone for the dollar yen. Moving on over to the AUD USD, it's an uptrend. I don't think this has changed. We do see the Forex Black Book is green as well, blue trend line. It's an uptrend sitting on top of the 100 period moving average over the past few days. In fact, today's analysis is not much different than what we've looked at for the past 3 days. If you've been around for the past 3 days, you know that we've been studying between the green and the yellow shaded area for the past almost week now for the Australian dollar. Let's take it down to the 4-hour time frame. I'm just going to do, let's do this. This might make it easier to recognize this. I'm going to draw this box out here and put it right here. And if we go back to the daily time frame real quick, now that we've drawn that box, take a look where that blue box is. Sorry, you see 1, 2, 3, 4 days now bouncing between the 75.70 and the 7500 level, between the top and bottom of that blue box. At one point in time, we'll look for a breakout of this little period of congestion, and I'll focus in on the uptrend, buying support, which is the green zone, or buying a breakout of the yellow zone. We want to be confident in both one of those two scenarios, a break of the yellow zone or a dip to the green zone. And the only reason I think to change our mind about this would be a breakdown under the green shaded area. Let's take it down to the 4-hour time frame again. You can see the market bouncing around in here. Nothing really new. I think it needs to significantly break out above the yellow zone before I would even consider a buy scenario. I don't want to buy it at the highest high. I want to break out, maybe a dip back down to the yellow zone as a buy scenario, or again, a touch back down towards the green shaded area as we've seen over the past 3 days. So if you're a buyer, which I think is probably the direction you want to focus in on, you're looking for the break of 75, 65, 70, open and close above it gives you higher confidence that it's a real breakout, not just a challenge like what we've seen over the past several days. However, let's keep an eye on this. Let's put this trend line right here. You can see the rising lows. If it breaks underneath that, I think we're looking for some intraday reversal back to the green zone. So keep an eye on that line. Above it, potentially goes higher. Below it, may look for the market to go back down for the Australian dollar. Moving on over to the Nzdusd. A very similar situation over here. We had the red trend line, was a downtrend. We started moving higher. Let's go ahead and put a trend line here as well along the black trend line. We started moving higher. So we're in a current uptrend. Forex Black Book is green as well. The black box, you see this little black box? Very similar to the AUD USD, isn't it? Blue, yellow, and green shaded areas are areas to focus in on. Let's go ahead and zoom it one more time here. Let's see. Let's put an arrow here. If you're buying, I think you're buying closer to the blue zone or a breakout above the green zone. Those are your buy scenarios here for the New Zealand dollar. Dip to the blue zone or breakout above the yellow zone. If you're selling or looking for reversal, then you're looking at the green zone as an interesting area, or you would eventually look for the breakdown of the blue zone and the black trend line. Take it down to the 4-hour time frame. Doesn't really change our mind about that. I don't want to buy too close. I don't want to go long too close to this green zone because so far the market has found resistance there. It's not too hard to see that. Market has so far found resistance along the green shaded area, so don't buy it unless it breaks the green zone. That's the only real reason I would see to buy it, is if it breaks above there. Maybe the yellow zone. We've already seen a little bit of support here at the yellow shaded area today. That's 71.80, 71.60. Maybe that gives you a little bit of a quick opportunity to go long towards the green zone, but just know that your risk is a breakdown of the yellow zone. It's a very similar situation. If we throw this quick short trend line here like this, you can see the market rising along that short black trend line. A breakdown of that and the yellow zone sends it lower. Staying above it in the yellow zone, we challenge the green zone, and above the green zone, a continuation higher for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.